The bullish trend remains intact. There's nothing wrong with the markets. There's nothing to suggest a bigger correction is coming. No reason to be real negative on markets right now. Everything about the market, from bullish thrust to the improving breadth, etc., all suggest that markets are going to move higher from here, not lower. So here's what you need to know before the bell this morning. The S&P is approaching its all-time high. There's a good bit of resistance right now that we're about to run into. Again, the markets have been up now. This is one of the strongest runs in the last couple of years for the markets. The NASDAQ is up 11% in 10 days. That's a very, very strong rally in the markets. This has been just a V-shaped, and talk about V-shaped recoveries. This is about as V-shaped as you can get in the financial markets. We're getting decently extended now above the 20-day moving average, getting fairly extended above the 200-day moving average again. Markets are back to overbought. Again, I know there's a lot of exuberance in the markets right now. Corporate buybacks really doing the bulk of the work here for the markets over the last 10 days. But again, this is not a time here particularly to chase stocks. So again, as we've talked about before, that this is all bullish. The bullish trend remains intact. There's nothing wrong with the markets. There's nothing to suggest a bigger correction is coming. No reason to be real negative on markets right now. Everything about the market, from bullish thrust to the improving breadth, etc., all suggest that markets are going to move higher from here, not lower. So, but that doesn't mean you won't get some corrections along the way to pull back to support. Maybe the 20-day, the 100-day moving average would provide a much better entry point to add exposure to portfolios than trying to buy right here. Now, here's the ironic part of this. If we can break out to new all-time highs, then retest that breakout of the move to all-time highs, that will also be a buying point. So again, sometimes buying higher is okay because you've now got a reset of overvalued or overbought conditions, etc., to buy into versus where you were previously, where things were extremely overbought. So again, that's really kind of we've worked through the markets here recently. Again, we've taken out all previous resistance levels at this point. The trend of the market is positive. Again, nothing really to be overly concerned about right now. But again, just as we start to move into September and we start approaching the election and earnings season, we may see a pickup in volatility. So again, just continue to manage risk. No reason to be overly concerned about markets right now, but it never hurts to manage risk, rebalance portfolios as needed, and always have a little bit of extra cash on hand for opportunities when they do show up. That's what you need to know before the bell this morning.